Hello everyone, welcome to our daily top 5 gainers and top 5 losers analysis for August 22, 2019, Thursday. This is in preparation for the next trading day on Friday, the last trading day of the week, August 23rd. My name is JC De Guzman. Today I'm going to talk about KPPI, PPG, PXP, PPC, ANI, MEG, PIP, ISM, CHP, and DMW. I'm going to give you my technical analysis based on my methodologies, followed by my recommendations. I'd like to mention three reminders as always. Number one, if any of these 10 stocks begin at a price lower or higher than the dominant range that you're about to see, and if you happen to be interested in trading the name, of course, please request for that particular stock's latest trade and volume distribution and through market sentiment charts in our private clients forum. Secondly, if you are about to enter a new position in any stock, regardless if the 10 SMACD combo is valid, regardless if the momentum power indicator is bullish, there's an extra process that you must go through, and that is the calculation of your reward to risk ratio. It's not enough that the 10 SMACD combo is valid. It's not enough that the momentum power indicator is bullish. You should always be satisfied with your reward to risk ratio before you do a test buy within the dominant range. And lastly, just in case you will hear, an index company, or I just want to remind you that this video is for short-term trading purposes only. If you are interested in asking for our sentiment based on a long-term investing time horizon, please post a separate request in our private clients forum. Please read the sticky notes. We have a format on how to ask for an analysis in our private clients forum so that we will give you an answer that is tailored fit according to your situation. So avoid asking, what can you say about this? What can you say about that? That's a general question that will only get a general answer. You don't want that. You want a specific answer that is tailored fit according to your risk tolerance, your investment horizon, your entry price, your average cost or average price. Okay? So let's begin without further ado, without much ado, we'll start with the first stock in our list. We have KPPI. So this one closed on Thursday at 18.32. As you can see here, I have plotted an up Fibonacci to identify its next psychological resistance, which is pegged at 26 pesos per share, in confluence with the 61.8% of the extension of the up Fibonacci. Support is around 16 pesos per share in confluence with a 78.6% retracement of the up Fibonacci. That's a precursor to 13.5 should it break below 16. Okay, so I'm not going to cite the 10 SMACD combo here because it's not appropriate, not applicable. KPPI has only had 3 days worth of historical data, so the 10 SMACD or 10 SMA is not applicable in this case. I'm not going to comment on what I see on the RSI, historical volatility, and DMI as well because it's not applicable at this moment. We have to let at least 30 trading days, not calendar days, to pass before I can legitimately make a comment regarding what I see on the RSI, historical volatility, and DMI. So I prefer to let 30 trading days to come to pass before I will make a comment on those oscillators that rely on historical data. All right, but for now, I would say that before my overall sentiment, let me show you first the trade and volume distribution chart on KPPI. Here, with respect to the closing price of 18.32, I would suggest that if and when KPPI starts at a price lower than 18.32, watch out for the range between 17.5 to 18. And if it starts at a price lower than 17.5, watch out for the range between 16 to 17.5. Okay? But nonetheless, the momentum power indicator, it remains bullish, of course, with the exemption for the third criterion, which is the size of the volume with respect to its 10-day volume average. That's not applicable as well because, as I've mentioned, this stock has been trading for the past 3 trading days only. Okay, so removing that criterion from the four elements of the momentum power indicator, I would say that the MPI or momentum power indicator remains bullish for KPPI. Now, the true market sentiment remains neutral. This has been the case for the past 3 trading days actually. Okay, so full disclosure, I have been only day trading KPPI. That means I am buying within the day and selling within the day as well. Okay, so it's just now a matter of knowing when to enter, and you know that already based on what I've been teaching here, especially if you attended the Evergreen Strategy in Trading and Investing in the Philippine Stock Market Seminar. Okay, my overall sentiment here for KPPI remains bullish. So as long as you are doing a test buy within the dominant range and you know where your trailing stop loss is, and you diligently do an upward adjustment on your trailing stop loss whenever applicable, you should be fine in trading KPPI. And of course, that requires the, you should have the time to monitor the by the second movement, the movement of the price by the second. And if your work goes in the way, then I suggest not to trade KPPI for now. Okay? Don't trade KPPI if you have a job that coincides with the trading hours in the Philippines. Okay? But for folks like me who have the time, who controls their time, and when it comes to monitoring the price movement, then you can trade the stock. I am bullish on KPPI. Okay, after that, we move on to PPG. This stock, of course, we will have to switch on the daily chart. By the way, when I was checking the intraday chart of KPPI, I was looking at the 3-minute chart. Okay, now this is the daily chart of PPG. Support is at 5.6, which is in confluence with the 61.8% retracement of the app Fibonacci. That's your support level. For the psychological resistance, which is in confluence with the 61.8% extension of the up Fibonacci, that's around 9.76. The 10 MACD combo is valid. I like the perfect bullish alignment of the 3 simple moving averages. Eyes on your trailing stop loss, please, because the RSI is already inching closer, very close to the classical overbought level. The risk level of PPG is, take note, it's extremely high already. The upward momentum is confirmed very strong based on what I see on the DMI and ADX chart. Okay, the dominant range of PPG as of Thursday's trading with respect to the closing price of 9.15 is between 9 to 9.15. Okay, so that makes the momentum power indicator bullish for PPG. The true market sentiment, the mood of the top 10 brokers is bullish on PPG as well. So my overall sentiment for this stock remains bullish, but for those who already have a position in PPG and if it's still trading above your trailing stop loss, please, eyes on your trailing stop loss. RSI is already super close to the classical overbought level. So if you'd like to top up, you can also do so within the dominant range. But again, eyes on your trailing stop loss. Okay, now if you're about to enter a new position, make sure that you calculate your reward to risk ratio first. It's not enough that the 10 MACD combo is valid, the momentum power indicator is bullish, and that my overall sentiment is bullish. If you're not satisfied with your reward to risk ratio, then postpone the plan of doing a test buy. And if you're happy with your reward to risk ratio, don't buy at any random price. Do it within the dominant range. Okay? So, next, PXP. It closed on Thursday at 13.6. Support is at 10.05. Resistance is at 13.63. As a precursor to 16.3, the 10 MACD combo is already valid. And take note, RSI is already playing inside the classical overbought level. Eyes on your trailing stop loss as well for PXP, please. Risk level remains moderate. The upward momentum is confirmed very strong based on my reading on the DMI and ADX chart. So the dominant range of PXP last Thursday was between 13.4 to 13.6. That makes the momentum power indicator bullish. The mood of the top 10 brokers last Thursday was neutral. But my overall sentiment remains bullish for PXP. If you have a position and you'd like to top up, you can do so within the dominant range. And of course, you know the answer. If you're about to enter a new position, calculate your triple R first. If you're satisfied with it, do a test buy within the dominant range. I'm bullish on PXP. Next, PPC. It closed on Thursday at 6.44. It broke above the resistance at 6.16, and it's now acting as its immediate support. The historical resistance is at 6.9. Okay, the 10 SMACD combo is valid as well. RSI is 3 to 4 points away from the classical overbought level. Eyes on your trailing stop loss as well. The risk level is already extremely high for a PPC. Nonetheless, the upward momentum remains very strong as confirmed based on my readings on the DMI and ADX chart of PPC. The dominant range of PPC on Thursday was between 6.3 to 6.3 to 7 pesos per share. The dominant range or the momentum power indicator is bullish. The mood of the top 10 brokers last Thursday was neutral. Nonetheless, my overall sentiment for PPC is bullish. If you're planning to top up, do so within the dominant range, but eyes on your trailing stop loss. So now, for those who are planning to enter a new position, take note, it already has an extremely high risk level. If you are a relatively newbie trader, you are better off waiting for a pullback, okay? Or avoid PPC and look for other stocks that have a low to moderate risk level. Align it to your risk appetite, of course, and that's the purpose of checking the risk level of the stock through its historical volatility score. You should be aware of that by now, especially if you attended the evergreen strategy in trading in and investing in the Philippine stock market. Okay, so after PPC, let's move on to ANI. ANI closed on Thursday at 14.9. Support is at 13.88. Resistance is at 15.13. The 10 SMACD combo is valid. RSI is still quite distant from the classical overbought level. The risk level remains low. So newbie traders, this is a low risk level stock. And the positive DMI already crossed above the negative DMI, and that's a good news. And take note that the ADX score is already above 31 points. So if this continues, ANI will continue to have a very strong upward momentum level or category. I like the volume as well. So ANI's dominant range on Thursday was between 14.88 to 14.94. The momentum power indicator is bullish. The mood of the top 10 brokers last Thursday was bearish as well. No, not as well, but they locked in their profits, meaning to say, on Thursday. So, do you have any eyes on your trailing stop loss? Okay, eyes on your trailing stop loss. Profit taking might happen heavily once it touches the resistance at 15.13 or anywhere near that level. So, eyes on your trailing stop loss. For those of you who are planning to enter a new position simply because I have a bullish overall sentiment for ANI, for now I think you are better off waiting for a breakout. You're better off buying on breakout because at this point, if you're going to calculate your triple R reward to risk ratio, you're going to have a thicker potential risk than your potential reward, simply because the last candlestick is already a lot closer to the resistance than the immediate support level. Okay, so after ANI, you move on to Megaworld. Meg closed on Thursday at 4.84. It broke below the previous support at 5.05, which is now acting as its immediate resistance. The immediate support is at 4 pesos per share. The 10 SMACD combo has been invalid since when? Since the last week of July. RSI is approaching the classical oversold level. The risk level of Meg is already moderate. So let's see if Megaworld will rebound from 4.8 or at 4.8 since the RSI is already in the oversold level. But it could get cheaper than this. Take note of that. Not because RSI touched 20 points or below, it doesn't mean it will rebound right away. The downward momentum remains very strong, by the way. Risk level is already moderate. So The dominant range of Megaworld was between 4.83 to 4.97. The momentum power indicator is bearish. That's closer to the intraday low than the intraday high. The true market sentiment on Meg was bearish on Thursday. There was no interest to buy the dips yet. So it's all the more that you should be on wait and see mode on Megaworld for now. Respect your trailing stop loss. And by the looks of this chart, the downtrend since the second week of July, your trailing stop loss must have already been hit several weeks ago. Okay? Don't make a joke by saying that you have a 50% risk percentage, okay? Because that's unrealistic. All right. Anyway, avoid Megaworld for now. Next, PIP. PIP closed on Thursday at 1.75. Support is at 1.55. Resistance is at 1.95. The 10 MACD combo is already invalid. RSI is downward sloping. It's in the neutral territory. Risk level is already high on PIP. The DMI, the negative DMI is already hovering the positive DMI, but ADX is still below 17 points. So let's see the dominant range. The dominant range on Thursday was between 1.75 to 1.8, which is closer to the intraday low than the intraday high. The momentum power indicator is bearish. The mood of the top 10 brokers last Thursday was bearish. There was no appetite to buy the dips. So with the 10 MACD combo invalid and the momentum power indicator bearish, don't top up, don't enter a new position. I suggest for those of you who have PIP, adjust the percentage of risk that you have applied on your trailing stop loss, because I'm already seeing a weakening upward momentum on PIP and a strengthening downward momentum. Of course, the opposite. Next, ISM. ISM closed on Thursday at 4.75. Support is at 4.46. Resistance is at 5.56. The 10 MACD combo is already invalid. And the RSI is downward sloping, moving closer to the classical oversold level. The risk level is moderate. And the downward momentum is very strong, obviously, since the downtrend started in July. So the dominant range is between 4.75 to 4.8, super close. Not really close, but it already touched the intraday low. So the momentum power indicator is bearish. The true market sentiment on Thursday was bullish, so some folks got the interest to buy the dips at 4.75. But for us retail traders, I strongly recommend not to imitate those deep pocketed investors. It's enough for us to know that they were interested to buy a few dips on Thursday. But let's wait for these sellers to get exhausted, reach an exhaustion level, so we can position much better than those who were excited to enter a new position. Okay, we don't have to be unnecessarily excited. We don't have to exaggerate the excitement. So let's wait some more. Once our 10 MACD combo is valid, and of course, especially once our momentum power indicator becomes bullish, that's when we test buy within the dominant range. But for now, just wait for those things to happen. Be in wait and see mode. After ISM, we got CHP. CHP closed on Thursday at 2.95. Support is at 2.88. And the resistance is at 3.6. If it breaks below 2.88, 2.33 will act as the immediate support. The 10 MACD combo is already invalid. RSI is downward sloping and it's in the neutral territory. The risk level is already high on CHP. And the negative DMI is already hovering the positive DMI, but the ADX score is still at 11.2%. Now, the dominant range of CHP was between 2.94 to 3 pesos per share. 2.94 to 3.03. We are going to be very strict with the range. Anyhow, that's still closer to the intraday low than the intraday high. So our momentum power indicator here is bearish. The mood of the top 10 brokers last Thursday was bearish as well. So avoid CHP for now. Don't enter a new position. If you have it and it's still trading above your trailing stop loss, just hold your position but don't top up yet. Once you've seen signs of a weakening upward momentum, adjust the percentage of risk applied on your trailing stop loss. Sell if you must. So last in today's video, we got DMW. It closed on Thursday at 9.4. Support is at 9.3. Resistance is at 10.64. If it breaks below 9.3, the next support is at 7.37 or 7.4, between 7.4 to 7.45. And the 61.8% retracement of the down Fibonacci seems to agree with that, with the historical support. And they are in confluence with each other, aligned. Okay, the 10 smack the combo is already invalid. RSI is downward sloping. It's approaching the classical oversold level. The risk level remains low, however. The negative DMI is already moving above the positive DMI, and ADX already at 20.6%. The dominant range was between 9.4 to 9.85. The downtrend is still more likely to continue. The momentum power indicator is bearish. The mood of the top 10 brokers last Thursday was bearish. No signs of a desire to buy the dips. Let's be on a wait and see mode on the DMW as well. Now, volume is not an issue, so it's worth it adding this into your watch list if you still have some slots left. What did I say during the Evergreen seminar? Have 3 to 5 stocks in your watch list only, because that's the realistic number that you can truly monitor without getting crossed-eyed after 3:30 in the afternoon, right? So, anyway, so I'm bearish on DMW. So there you go for today's daily video for short-term trading purposes. I'd like to remind once again those who have subscribed for 1 year, 6 months, and 1 month to attend the Evergreen Strategy in Trading and Investing the Philippine Stock Market Seminar, because it's a must for you to understand what I am always talking about. Okay, you and I are familiar with MACD, RSI, all of those oscillators, but I am using them differently. You will have a crystal clear and better and faster understanding of what I'm talking about if you will attend this seminar. Anyway, if you have subscribed for 1 year, you automatically get a 50% discount for your ticket. So this September 28, I'll be in Makati, October 26 in Davao, November 23 in Cavite. Next year, January 25 in Baguio, February 29 in Pampanga, and March 28 in Cebu. So get your ticket. Okay? If you are subscribed for 1 month or 6 months, subscribe or get your ticket as soon as possible while the discounted ticket or early bird rate is available. Okay? Again, my name is JC De Guzman. I'm wishing you a disciplined and a profitable trading day this Friday. It's going to be a long weekend again. It's going to be a holiday on Monday, so long weekend. No trading on Monday. We'll resume on Tuesday. Bye for now.